I was able to lock in just under $5,000 today, copy trading my 20 Apex accounts. In this video, I'm going to break down exactly how I did it and how I've been able to consistently lock in between $2,000 and $5,000 per day using this one simple strategy. Now, unfortunately, in the trading world, there is a lot of crap, a lot of misinformation, and a lot of people trying to sell you courses and special indicators. And the truth is, you don't need any of that. All you really need in trading is to understand supply and demand, as well as volume, and how to find key levels in which more volume is likely to be conducted. Now, I get it. Any trader can look at a chart and have different levels that they find, but for me, locking in on the 1 hour and the 15-minute time frame helps me identify these more foundational key levels in which price is more likely to pivot from. Now, if you go on my channel, you can see the last couple of shorts that I posted really talk about pivot points and the importance of the open price for the futures. If you want to check those out, those links are in the video description. But if we dive into this chart here, you can see this yellow line that runs clearly across the chart is the 6 p.m. open from yesterday. Now, every morning I always check Forex Factory to see if there's going to be any news, and I realized that today we had 9:45 and 10 o'clock news. So on days like this, I am definitely not trading until at least after 10 o'clock. And regardless of what you think, if you are trading during news, that is gambling, that is not trading, because price action can do literally anything within those candles. I do think the price action from that initial candle can give you a clue in what the market is likely to do after. Notice right at 10 o'clock, we gapped down and had some immediate selling. Now, unfortunately, a lot of traders make the mistake of initially just jumping in the short, seeing how quickly the price action moved to the downside, and then they get trapped in an immediate 20 to 25 point loser. And if you're trading Nasdaq mini contracts, which most new traders do because they like the rush and they want to make money fast, that's the quickest way for $500 to completely evaporate from your account. And this happens time and time again. A trader will get chopped up in the morning, and then it'll be a clean and easy move pretty much the whole second half of the day. And this is what you want to avoid as a trader. You essentially want to have the least amount of risk early in the morning, where there's still a decision being made on which direction the market is going to go. Now, the next thing to notice over here on the right, I have the VIX and the advanced decline for the NYSE. Now, all this kind of does is give me the market sentiment. In general, if VIX is going up rapidly, I expect the market to be very volatile, and I also expect the market to trend downwards. And it's the same with the advanced decline. If the advanced decline is going or trending downwards, I expect most of the market to follow suit. Now, this is not always the case. As with anything in the stock market, nothing happens 100% of the time, but these are patterns that I have seen recently. So what made today my A+ setup is, after the news, we chopped around, but we held below the open. Now, another thing at that level was the previous day close and the previous day high. As we continue to hold below those key levels, it gives me more confidence to scale into my short position. And that's what I do, is I scale into one micro Nasdaq contract at a time. And I think all traders should trade micro Nasdaq contracts instead of the minis. Not only does it limit your risk, but it allows you to scale in and out of trades as a trade is working in your direction. And there is a big difference between continuing to add to a losing position and to scaling into your actual position. Notice, as we were trending down today, if you kept adding contracts, that is not scaling into a position. That is dollar cost averaging into oblivion until your account is gone. And lastly, look at the volume profile. Higher volume nodes means that there was more of a battle between buyers and sellers at that level. So more volume was conducted at that price range. There is a huge volume node and then a bigger gap of lower volume area and then another volume node. The theory is that the price is going to move pretty quickly from one large node to the next. And this can kind of give you an inside view of the market. If you're not looking at like a volume profile and you don't have these key levels planned out, you can be caught by surprise from some of these bounces that you would have seen if you had those things plotted. Now, I always enter off of the 1 minute time frame. However, I'm watching the market on the 5 minute time frame to get a more clear and direct picture of what the market is doing. And I think that's another mistake traders are making, is they get so zoomed in on like maybe the 1,000 tick chart, or you get so scoped in on the 1 minute chart that you're not seeing the overall picture. And I think that's why a lot of people say day trading is so risky or it's gambling, is because you get so zoomed in and the market is inherently random. So any 1 minute candle can do anything, but the overall trend will play out over the longer time. So in summary, what drastically increased my win rate and has kept me from blowing accounts is switching over to micros and only trade around key levels. As you can see, these key levels that I have marked out on the chart are from yesterday and the previous week key levels in which we broke out or bounced from. So a majority of the work that you have as a trader comes pre-market. You're going to look at the news for the day, the overall market sentiment, and then weekly or monthly key levels. Once you have those plotted, a lot of it is just patience. You have to wait for setups to show up. You don't just want to trade to trade. And when you build these systems that are repeatable, that have a clear risk identified with clear key levels as a form of a target or an invalidation point, your trading will drastically become more consistent. And in the world we live in today, consistent income from trading could probably help out a lot of people. So if you have any questions, drop them down below in the comments. Have you already identified the correlation with the VIX? And what other key indicators or confluences have you personally been using in your trading? And as always, none of this is financial advice. This is just for education and entertainment purposes only. But make sure you subscribe if you want to follow along this journey. I'm going to continue to put out as much valuable information as I possibly can, any trends that I'm seeing in the market and things that I am watching. So I appreciate you watching this video and have a great day.